Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, 30th day of August 2017, and this is the Daily Report for Gold and Silver. A strong U.S. dollar has put substantial pressure on the precious metals markets today, accounting for the vast majority of today's downside move in gold, which did close off by about $5.10, trading to 13.80. Let's round it up to 13.40 with a low of 13.10. Silver off fractionally, down about 4 cents at 17.38. And as I said, a bounce in the dollar due to solid economic data pushed that up about 0.6% at 92.85. Also, the strong economic data, specifically the ADP jobs report, which came in solidly above expectation, as well as a second updated second quarter GDP at 3%, really propelled the stock market to post moderate gains but not sell off. Dow Jones Industrial Average up 27 points at 21,892. NASDAQ up 66 points, a gain of about a full percentage at 63.67, and an 11-point rise in the Standard & Poor's at 24.57. Lastly, crude oil has fallen now for the third day in a row. It is trading at 45.97, down 47 points on the day. So traders, although we are certainly trading well above the low of today, which is sitting at about 13.10, we still do have gold trading under pressure on the day, currently trading off just shy of $5 at 13.14 and change. And traders, ever since gold prices surged past $1,300, which occurred Sunday here in Honolulu and the mainland as the market opened in Australia, Hong Kong, and London. Ever since that point, we have had very shallow bodies in our daily activity. Bodies meaning the distance between where the market opened and where the market closed. Now, yesterday we had an extreme high at around 13.32 as gold prices reacted to a missile firing across Japan. It seems as though cooler minds have prevailed and we have a little bit of softening action in the marketplace. That being said, there are a couple of things on a technical basis we can easily derive from recent information. The first thing is, when we take a look at the lows over the last couple of days, they come in just at or above 13.10. You can see that on yesterday's activity as well as today. So it tells me that on a technical basis, we have solid support at 13.10. We can also see various levels of resistance. First is this new yearly record high just above 13.30, and then also 1321, which was our original target, if you recall, based upon the Fibonacci retracement we have currently drawn. And so traders, all things being equal, my sense is what we are witnessing right now is some backfill. We do have a strong dollar, which is reacting to some solid economic data that came out. And at the same time, we have our jobs report coming out on Friday. So depending on where those numbers come in at, we could see some gyrations in gold. However, I believe that gold should have a firm footing above 1300 with solid support between 1300 and 1310. And traders, another factor that is extremely important when looking at today's activity in the precious metals markets is dollar strength. It was the primary focus of our opening letter. And to illustrate that, I have pulled up a spot gold chart so we can take a look at the Kitco Gold Index, which I have just brought in. And currently, gold is trading off about 75 cents. However, the screen print that I grabbed puts it off about 20 cents on the day. Take a look at the individual components. First of all, a strong US dollar is actually taking away about $8 worth of value per ounce in gold today, and normal buying is accounting for a positive 780, and that's where we're getting this slight differential of negative 20 cents. In other words, it is dollar strength that is totally overwhelming buying that's going in the market, which is moderately strong today with a net change of about $7.80. When we look at silver, silver by the slightest of margins is actually able to overcome dollar strength. Dollar strength takes away 11 cents, 13 cents positive in terms of bidding the precious white metal up for a net change of positive 2 cents on the day. And traders, speaking about dollar strength, we are looking at a daily dollar chart. We can see the extreme low that the markets hit yesterday and this dynamic bounce up today, opening and taking it over 92, which was our initial target on the dollar index. And most interesting, forming a pattern that many of our subscribers will recognize as a variation off of a three-river morning star. The reason I am calling this a variation is that the red candle, which makes up the first candle in a three candlestick pattern, is certainly a small bodied candle. It's not large by any extent. Take into account the prior 2 days before you get this doji cross in the center, we can certainly see that this is a variation off of that pattern. So traders, in as much as we raised our stops yesterday, and as far as our trade goes, we're currently long at $12.99. We currently have stops below 1300. My recommendation is to maintain your current long position as well as maintain your stop. Over the next couple of days, I do want to start to talk about scaling or adding to this position should we see the proper parameters develop. And traders, strong economic data that came out today not only strengthened the dollar, but also was very supportive of U.S. equities, with the equities markets closing in higher territory, although very moderate gains. Dow Jones Industrial up about 0.1%, 21,890. So we are certainly still well below 22,000 when we look at the Dow. S&P also tracking higher on the day. That is tracking up about 0.4%, up 9 points. And then lastly, the composite, which is also tracking higher, but is outperforming the other indexes, up almost a full percent or 61 points at 63.63. And traders, lastly, I do want to take a look at crude oil. Our hearts and prayers do go out to those in Texas. Hurricane Harvey really drenching that area with 50 inches of rain, unheard of. But oddly enough, the net effect that it has had on crude oil is to put it under pressure. We have seen the market trade lower for the last 3 days, now trading and breaking below 46 per barrel at 45.94, down about 50 cents a barrel. In terms of a level of support, and this is only a technical basis, I would look for 45.50 for a potential level of support and a bounce back to higher pricing. However, one must note this is entirely an event-driven market at this point, and depending on when these refineries get back online will determine how crude oil prices out over the next week. Traders, as we talked about, there's no question we have the market softening. I call it backfill, considering the dynamic breakout that we witnessed as gold moved from below 1300 to propel it above and to actually hit a 1330 target. The fact that it is now given back some of those gains is to be expected. I show solid major support at 1300 and then the next level above that at about 1310. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.